on the screen, there is a Hindenburg Omen flashing, which suggests that there is going to be a major correction in the New York Stock Exchange and the NASDAQ. And the doom and gloom merchants will tell you, well, that's it. It's all going to happen. And it has happened prior to big main events. So it does have some importance, although it has been, or equally, there have been times when it's been completely wrong. But it has preceded several major market pullbacks and crashes, including 1987, the dot-com unwind in 2008. So it's at least worth bearing in mind what this is telling us. And for me, there are lots and lots of clues as to why I felt the last 5 years we were going to have a recession or a pullback, a significant pullback, and as yet it hasn't happened. And yet I've managed to double my account most years by being very conservative, by being in commodities, uranium, gold, silver, copper nowadays, rare earths, etc. Because if there is a crash, then commodities generally do better than other things. And if there is a crash, gold is the ultimate safe haven. And so whilst I also have some crypto, my crypto in effect was being hedged by my gold and my gold miners. So the main thing is if you are currently invested in the stock market, then have a look at the very least, have a look at what's being said, what's going on in the background, and make a plan. And say, I trimmed quite a lot of my positions recently to go to 50% cash and gold. I am treating gold now as my bank account, partly because the bank in Isle of Man keeps trying to debank me because I live abroad. And I also, because at the end of the day, last year, as explained before, gold went up 80%, whilst you earned bugger all on your savings. And therefore, had you had your money tied up in gold instead of in cash last year, you would have made 80% on your money. And I went through all of that in the previous live training session, not last week, 2 weeks ago. If you look back in the blog, I explained how gold had risen by 1,500% since the year 2000. And in the same period of time, how the dollar had collapsed and dropped by almost 50%. So in other words, something that cost you $1,000 in the year 2000 now costs you $2,000. So inflation, 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 inflation. And Henry Paulson came out last week. He was the former head of the Treasury. So the guy knows what he's talking about. And he was head of the Treasury during the 2008 crash. So he has a lot of experience of what happens when things go wrong. And he came out last week, week before, and he said the American government at the very least needs a plan, because he sees a lot of things now that historically, the guy's been doing this for a very long time. He thinks that there are a lot of clues that we could be on for a crash. And the concern is treasuries. And I show this to you each week, and we'll have a look again. But the thing is, once the US interest on treasuries starts to go through the roof, the bond price collapses, and traditionally the stock market then also will collapse. And I showed you this the other week. This is an indicator, well, not an indicator, but this is the chart for the 30-year note that I check every week. And I said a few weeks ago, what's happening here now, there's my chart's gone, is, what the heck, we are up at a triple top. So when I was with you 2 weeks ago, I said, if it gets up here, this is going to be a major, major issue for the US government. And what it means is that if the bond buyers dry up, then the Federal Reserve will start buying its own debt again, which will probably lead to QE. So in the short term, it may be that there is a blow off top. And there are clues that this market is still going to go higher. And now we're in a scenario where it's what's known as the opportunity cost. The danger is now is, do we get involved in these markets at these ridiculous highs and walk away, and then turn around and watch the S&P go to 8,000 plus before a drop? Or do you sit on the sidelines and sit on your hands and say, look, I've made a lot of money in the last few years. My priority is not to give it back. And I still think that with gold, particularly, and the miners, that I am hedged. But this chart is very scary for the US government. And on each of the previous occasions, I mean, you know, as technical analysts, each time this has happened in the past, the American government have intervened in one form or another, and we have seen significant drops. But what it means at the moment is the US government is currently paying $1 trillion a year just in interest for people to buy the bonds. And as people lose confidence in the dollar, then and start to put more money into gold, then this is a very bad scenario. Now, when it gets really bad is if the 2-year note goes above the 10-year note, because then that's what's called an inverted yield curve. And that's when you end up with they're paying more interest on a 2-year than a 10-year or a 30. 2-year note is going up 4.62. Now, you could say, well, why is gold not going up at the moment? And the theory goes that the big funds will be putting their cash into the USD because on a short-term bond, because at least they are receiving some interest. And to put the money into US bonds, if it's a European fund, they will have to convert in dollars to do it. But for me, I would rather have gold and silver. So this is why I watch this all the time. And I have talked about this in the past. This was when Trump blinked the other year, last year in April time. It started to rise and then it got up to here. And that was to do with tariffs in China. So be mindful, be watching out. Now, a couple of days later, Paulson kind of retracted a little bit because he must have taken a lot of hit probably from people in power. And he came back and the Institute, Paulson said, his concerns about the debt were not immediate, and he believed the US economy remains the most resilient in the world. Of course, he's going to say that, and is able to withstand the uncertainty, etc. So he's backpedaled a little bit about that. I'll leave you the link for this in the blog post when Ashley posts this tomorrow. This is an interesting article. This guy was the US Deputy National Security Advisor for International Economics. And he's talking about the impact globally and ties that in with oil as well. So I'll leave you that one for you to have a read. This is a good mailing list to be on the Felder report. I don't pay for it. I just get the free version. But they were talking this week about how world oil inventories are falling at a record pace. And we're getting at the point now, if this Iranian situation is not resolved within the next few weeks, you could see an exponential drop in oil, and that could lead to a worldwide recession. And then David Rosenberg here, he's the head of chief strategist, founder of Rosenberg Research. He's saying this is a very expensive stock market, which we know it is and has been for a while. And he's talking about the same thing. And again, Bloomberg article, not going to pay for Bloomberg, so just got the headline. But again, the Iran war is draining the world's oil buffer. And then Forbes talking about the countries most in danger of running out. And there are countries that are running out, and it's talking about some of the bigger countries have got more room for maneuver, and some of these are processing. Australia, Zoe, is it impacting Australia yet? Is there a shortage? Is there any kind of restriction or any other Aussies in the room? Philip, is it impacting there on the ground yet or not? And then Iran war also, this is a good one. Modi, the Indian Prime Minister, I mean, those who've subscribed to the theory of the World Economic Forum's 2030 plan that everybody will work from home and won't need a car, etc. Well, if you live in India, he's pushing people to start to work from home. And then this one, he's also trying to persuade Indians to not buy gold. The chances of an Indian not buying gold, Ashley will confirm this, is nil. Culturally, the Indians love gold. They buy lots and lots of it. Some of it, there's a season, I think it's in the fall, October through to February, which ties in with the wedding season. Traditionally, they give gold for weddings and things. So I can't see this on any way, shape or form. But he's saying because last year they imported, where would it go? I can't remember. I saw the figure earlier. They imported a lot of gold. But also talking about telling the farmers to use half as much fertilizer. And I spoke about this last time. A lot of farmers will have to use half the fertilizer because A, they can't get it, and B, it's too expensive. But if that happens, the fertilizer is down, then the yield will be down, which means that food prices will go up more later in the year. Now, I don't usually use Facebook for research, but I found this image, and this was the best image I've found. This is from somebody called Merzalot Hill, but a very nice graphic showing the countries in March that were being impacted by the war, and Philippines in particular. I remember reading previously, they've got the government working from home, and I think they had short-term weeks and all sorts of things going on in the Philippines. So these are the impacts they're having. Even if the war ends tomorrow, the ship's in the wrong place. It's going to take months to catch up. And Besant, the US, I think it's Treasury guy, he said in an interview in March that if it finished in March, it would take until September for gas prices to go down in America. And then there's another interesting one. Those of us that have been in crypto for a long time will remember that about 4 years ago, one of the arguments against Bitcoin was how much it cost in electricity to produce a single Bitcoin. And that was used as an excuse by some countries, and certainly was used to tamp down the popularity of Bitcoin. Well, this time last year, Elon Musk was warning that AI could trigger an energy crisis. And again, I've spoken about this recently, and this is why I'm in uranium and some of the energy stocks that I'm in. But this is a year ago. And then since then, he's been talking recently. It was an interview this week. And I like the phrase that he gave. Where's it gone? Those who have lived in software land don't realize they're about to have a lesson in hardware. And of course, as a manufacturer, he is well aware of the issues when it comes to manufacturing. So what they're saying now is there's not enough power. And if you remember, I spoke about a couple of weeks ago, the chief financial officer for OpenAI said she was concerned there was not enough money coming in. And they were also concerned about the bottleneck for data centers and energy. And Musk is suggesting that they will, for him, AI and the power needed could come from the sun and from satellites, which we're moving into the twilight zone here. What could go wrong? But that's what he's talking about. And then there was an article, it just happened coincidentally this morning, the WSJ this morning, American rebellion against AI is gaining steam. And what they're talking about is energy. They're talking about data centers, but they're also talking about jobs and jobs going. And I've spoken about this before. And I listened to a guy yesterday who's very heavily into this. And we know already that a lot of admin jobs are going. He was talking about graduates from America now. The amount of graduates leaving college unable to get a job is the highest ever. Graduates are now not earning any more money than non-graduates, the youngsters, and there's fewer and fewer jobs. And he was talking about if they can get through this bottleneck, the amount of jobs that will go is going to be immense. And I was talking to Rich Friesen yesterday, and Rich has also decided not to retire. I knew he wouldn't. He's had 6 months off. He's 2 new projects in the go, and he's back on the ball. Because we were chatting away, and I said, "Oh, I got bored," and he said, "No, it's yeah, exactly the same." But we were talking about the psychological impact, and that's what part of this article is about. And in the UK, in 1815, there was what was known as the Tolpuddle Martyrs. And what was happening as the economy was shifting from agriculture to factories, and then the machinery came along for factories that were taking people's jobs. And I think it was looms in factories that they used for cloth. Then the Tolpuddle Martyrs basically went on the rampage and destroyed a lot of this kind of equipment. So we could well be on the cusp, well, we are on the cusp of another industrial revolution. And obviously, it's a scary time for a lot of people. Now, a big thing. So I think the stock market's going to tank, but in June, SpaceX IPO comes along. And there's been some machinations with this. Normally, if you have a big company does an IPO, then it can take between 4 months and a year before it's accepted into NASDAQ. And NASDAQ have changed the rules. And so the date at the moment, if there's a crash, I think this will get pulled. But at the moment, if there's not a crash before then it could be that SpaceX is going to launch, no pun intended, on June the 12th. The very next day, it could be listed in the NASDAQ. Now, while I grab a quick drink, can anybody explain to me the significance if SpaceX goes onto the NASDAQ? How does that affect American investment companies? Nobody? Right. Well, what happens is that if a company goes into the NASDAQ and the S&P, I believe, the hedge funds have to buy it. So my suspicion is that there will be a launch. It will be at a silly price. If the take-up is as expected, it'll peak like a crypto peak. The very next day, the hedge funds have got to buy it, so it will peak a bit further. I would not be at all surprised if it then tanks. So my suspicion with that, I'm personally not touching it. And Zoe from Perth said that the petrol situation is not so bad at the moment, but the government have got ads on the radio telling you about being careful and no unnecessary journeys. But she thinks regional Australia has been hit hard. Um, Philip says from Australia, yes, it's impacting the hip pocket. Yes, so obviously everybody's paying more. Grant says, if there's a crash in stocks, is it inevitable there'll be a crash in crypto? Probably, I think. Possibly, Bitcoin has often been talked about being a crypto version of gold. But I think it's quite possible everything will come down. 2008, the stock market came down 60%, gold came down 30. But gold recovered very quickly and then tripled. Um, Ashley's given me a link for something. What's this to do with? Chinese court rules firms can't lay off workers on AI grounds. Okay. Well, what the interview I was listening today about this was saying, it's a lot easier to sack people who don't actually work for you yet. And what he meant by that comment is this is why the graduates are not being hired, because rather than hiring people and laying them off in 6 months' time with the costs that go with that, they're just going straight to AI and not employing new people. Another one, AI replay. Yeah, so Ashley sent me that one. Devon says jewellery shares fell 15% after the announcement by the Indian government about gold, understandably. Now, Zoe in Perth is into Tesla, and I know quite a lot of you are, and I've never got into Tesla. And I just think there's so much smoke and mirrors with this. And the cars, initially, the first few years, they weren't making money selling cars, they were making money from carbon credits from the US government. I think they were getting $500 per car because it was green. The fact that the batteries are very difficult to get rid of at the end of it, and the fact that all the ingredients have come from all over the world on ships and being dug out of the ground, sometimes by hand, were irrelevant. And Tesla made money that way. Now, Tesla clearly is struggling now with the Chinese competition. And Musk was been talking about taxis and driverless taxis for years. And that's another thing I'll just touch on in a moment. And robots. By now, everybody's supposed to have a robot in the house, and everything's going to be wonderful. So this is an article. I'll share this with you. I am not in any way condoning, confirming, because I do not want to be sued. But I shall share this with you, and you take from this what you wish. But some of the things that he talks about here, I think, are quite relevant. And he's talking about the Tesla full driving car. And I said this before, they've got 10 of them in Texas, and because they're still in the development stage, they have a bloke or lady sat in the car with these things. And they're not driverless. But this guy, if this is true, is saying that the amount of accidents that these Teslas are having is 10 times the average American, or 9 times the average American driver. And also, it's talking, as I mentioned before, Waymo have been operating 2,500 fully driverless vehicles for years, and their crash rate is 85% below human drivers. So Tesla, he's saying, I've got one unsupervised vehicle. So he's basically saying that all of these things with Musk are things in the future. Just excuse me, I knew this would happen. Guess who's at the door? Without fail, Amazon turn up whenever I am doing this, and it's the one morning when my wife's not here. My apologies. So he's talking about the fact that the figures. I mean, I read an article he'd written the other day. He was talking. He thinks that Tesla's worth about $50. So he's also saying that within the wording, because if SpaceX has now bought out X, then basically Musk's debt has gone. And he's also suggesting that if SpaceX acquires Tesla, it changes the rules on when Musk gets paid out. So, a very interesting article. I'll throw that in for you just to have a think about. And on the subject of having something to think about, I bought stocks and shares during the dot-com boom and stayed in too long. And this Anthropic was also, as soon as I saw this, suddenly thought, this sends shivers down my spine because this is so similar to the dot-com boom, where you had all these sexy named companies raising millions and billions of pounds and dollars, but actually had nothing underneath. Well, Anthropic is supposed to be worth 1.4 trillion, according to this guy, and yet at the moment their total market cap of the tokens they hold is 9.59 million. So that is, to me, is a very, very big red flag. So bottom line, buyer beware. Keep your eye on what's going on in the Middle East. Trump looks as though he's got himself into a mess and is difficult to get out of because the Iranians are not backing down. And at the moment, they've not given him enough of an excuse to go back in again. So be keeping your eye on that. Keep your eye on the news, see what's happening. See what's happening if you're in the States or you're investing in the States. We know inflation's gone up significantly last month. It'll be up again this month, presumably. They're now gone from talking about cutting interest rates to raising rates, possibly later this year, certainly next year. There's a lot of things that could go wrong, and there are a lot of things that are very highly overpriced, in my opinion, at this time. And so for me, and for anybody who's kind of in the 50s plus and has an eye on accumulating wealth and money in their pensions and things, just be careful. For those of you in my investing group, I am going to do an update today. I am waiting for the markets to open work until Thursday morning because Nvidia published their results on Wednesday. If they're bad, that would help the drop. If they're good, then Nvidia will probably shoot up again. But again, I am not in the market for buying things at overextended prices. But keep your eye on this and keep your eye on the news and just be careful out there because those who were coming up to retirement in 2007 and thought that they had enough cash to get through suddenly saw their pension plummet by up to 60%. And we don't want that happening to any of us of a more mature age, do we? Righty ho, I hope you've enjoyed yourself. Ashley said his Zoomer goodbye. Actually, that's not as daft as you might think. Because if you think on, Zoom did particularly well during COVID, didn't it? Because everybody was working from home. I haven't researched it of late. I don't know how much competition they've got now, but
Yeah,
interesting.
it's well below 100. I think it's like 94, and it looks like it's breaking an uptrend. So I was looking at it yesterday, and it did well in COVID, isn't it? Because
Yeah,
everything dropped and everyone was working from home, so the demand went up for it.
yeah, it did.
Um,
It did very well,
yeah,
and they've got more apps. Well, they've got more and more apps, which are very annoying because they can't find anything anymore. Uh, mm, Too high for me. As you know, I want at least 25% to the recent high, and that doesn't fit the figure. I need to do some research. I would be thinking if we got into here and how it stacks up. There was all sorts of things went wrong for Zoom after COVID, and it wasn't just that people went back to work. So
yeah.
personally, not for me, but that's not to say it won't work.
Sif has
Right.
asked a question for you.
Okay, Sif, where have you gone? How realistic and achievable is it to consistently keep drawdown below 5%? It's just a rule. So if you've got to, if you want to do a funded account, you've got to stick to 5%. And I'm suspecting that you may be thinking, well, do that just to pass things or just whilst you're learning. But long term, that's the goal. I mean, the goal for me is to make 3 to 5% profit, not to have more than 5% drawdown. And so Pierre and I had a bad year a couple of 8 years ago. But other than that, the goal is to stay well below 10%. And again, you depend on person, you depend on the risk tolerance of people, but generally, well, for a funded account, there's no choice. It's 5%. Grant says expensive mistake to make. Which one, Grant? Oh, Zoom? I'm not sure what you were referring to. Righty-ho, I'm going to hand you over to Ashley now. And the recording of my bit will be in the blog tomorrow, and Ashley's will be in later today.